mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. The first question is from Ashley, and she says, I want to go to income, but how do I know the right asset allocation between income generating stocks and bonds? All right, Ashley, hey, thanks for your kind of insightful question about transitioning to income focused investments in retirement. Really well managing that risk and volatility. So let's dive deeper, into how to determine that right asset allocation between the stocks and bond, income generating stocks and bond. As you enter your early retirement years, often referred to as the go-go years, it's essential to strike a balance between your income needs, your lifestyle desires, and your personal risk tolerance. So let's break it down into kind of two key components. First, consider your income requirements. Calculate how much you need to maintain your pre-retirement lifestyle. I call it your I need goals, right? And this includes essential expenses like housing, utilities, groceries. Additionally, factor in discretionary spending for activities and hobbies you plan to pursue in retirement, your I want income. Now, this dual approach helps outline your baseline financial needs versus your desired lifestyle enhancements. Now, regarding asset allocation, many retirees allocate bonds and bond-like instruments to cover their I need income goals. Bonds typically provide stable income streams and are less volatile than stocks, making them suitable for funding essential expenses. On the other hand, higher dividend-paying stocks can complement your portfolio by generating additional income that can support your I want income goals. Now, while stocks carry more risk due to market fluctuations, dividend-paying stocks from solid companies often provide consistent payouts that can grow over time. So the decision on the proportion of stocks versus bonds should also, you should take into consideration your risk tolerance. This involves understanding how much volatility in your investment portfolio you can comfortably endure without feeling undue stress. Imagine your portfolio experiences a 10%, 20%, 30% paper loss. Where would you feel the stress level peak? This emotional or psychological threshold is crucial in determining the appropriate balance between stocks and bonds. For instance, if you find that you can tolerate only a modest loss in your portfolio value before feeling stressed, a higher allocation to bonds may be prudent. Conversely, if you have a higher risk tolerance and can weather larger market fluctuations without significant concern, you may opt to allocate more to dividend-paying stocks to enhance your income potential. Remember, investing for retirement income is not just about the numbers, it's also about aligning your investments with your emotional comfort level. Balancing the mathematical aspects with your personal risk tolerance ensures that your portfolio serves both your financial needs and your peace of mind in retirement. So if you're uncertain about determining this balance, consulting with a financial advisor who specializes in retirement income planning can provide personalized guidance tailored to your specific goals and circumstances. That was a great question. And as always, if you want to send in your question, you can do so by emailing them to poollocke@poolelocke.com. So let's move on to our second question. And the second question is from Vicky. Now she says, should I buy long-term care insurance? Now, Vicky, I get this question a lot. And deciding whether to buy long-term care insurance is a significant consideration in retirement planning, particularly when aiming for what we always talk about, reduced risk and volatility in your financial strategy. Let's dive deeper. Long-term care insurance can be a valuable asset if you have sufficient income or assets in retirement to comfortably afford the premiums without straining your financial resources. The key advantage is that it helps protect your savings and investments from the potentially devastating costs associated with long-term care services, which can be substantial. However, the timing is crucial. Right? The younger and healthier you are when you purchase long-term care insurance, the more affordable it tends to be. So waiting until you're older or already in need of care can make premiums prohibitively expensive, or even make you ineligible for coverage due to health reasons. So to determine if long-term care insurance is right for you, consider your overall financial situation. Ask yourself if you have enough income or savings to cover potential long-term care expenses without jeopardizing your retirement lifestyle. If purchasing long-term care insurance fits comfortably within your budget and provides peace of mind against the risk of high care costs, then it could be a prudent choice. It's important to note the stats, right? The statistics. About 1/3 of people will require some form of long-term care in their lifetime, and the average duration of this care can span several years. In many states, the costs associated with long-term care can easily amount to hundreds of thousands of dollars. Long-term care insurance helps mitigate this financial risk, ensuring that if you do need care, your insurance can cover a significant portion of these expenses. On the other hand, there is a possibility that you may never need long-term care, in which case the premiums paid may seem like an expense without direct benefit. This is the inherent nature of insurance. You pay for protection against a risk that may or may not materialize. Ultimately, the decision to purchase long-term care insurance should align with your individual financial goals, health status, and tolerance for risk. If you're unsure about whether it's the right choice for you, consulting with a financial advisor who specializes in retirement planning and insurance can provide personalized guidance based on your specific circumstances. Remember, the goal is to ensure your retirement plan is robust enough to support your desired lifestyle while protecting against unforeseen health and financial challenges. Stay informed and explore all options available to you as you navigate this important decision. Your financial security in retirement matters, and making informed choices now can help safeguard it for the future. Two great questions. If you would like to send in a question, please do. Email it to poollocke@poollocke.com. And if you like what you heard today, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source. And I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the bank.